Remember 2008? House prices crashed 30%. Millions lost everything. Everyone said, never again. Banks claimed they learned their lesson, and regulators promised tighter controls. They lied. The 2024 housing market is more dangerous than 2008 ever was. But this time, the crash isn't coming from subprime mortgages. It's coming from something far more insidious, something most people don't even see. Corporate investors now own a staggering 40% of single-family homes in major American cities. BlackRock, with $10 trillion in assets, is buying entire neighborhoods, often paying way above asking price. They're not flipping these houses. They're turning the American dream of home ownership into a subscription service. When regular families have to compete against trillion-dollar hedge funds for a home, guess who wins? When a corporation can outbid you by $100,000 in cash, guess what happens to prices? But here's the real twist. This isn't just about expensive housing. This is about the systematic conversion of our economy into a rental society controlled by Wall Street. Let me show you exactly how this new housing scam works, why it's more devastating than the 2008 crash, and what happens when an entire generation becomes permanent renters. The 2008 crash happened because banks gave mortgages to people who couldn't afford them. This time, the exact opposite is happening. Banks are giving mortgages to corporations with unlimited money who are buying up homes that regular people can't afford anymore. Here is how it works. These investment firms use cheap debt to buy thousands of homes at once. They pay 20 to 30% above asking price in cash, making it impossible for families to compete. Once they control enough homes in an area, they can artificially restrict the supply and inflate rents indefinitely. It's not about homeownership anymore. It's about creating a permanent rental class. When BlackRock owns your neighborhood, you don't buy a house. You rent from BlackRock for life. They control both the purchase price and the rental price. They win either way. The math is brutal. The average home price in 2020 was around $320,000. In 2024, it's nearly $485,000. That's a 51% increase in just 4 years. But what about the average income? It's only up 12%. The gap between what people earn and what a house costs has never been wider. But here's the part most people miss. This isn't a bubble that's going to pop and reset prices to something affordable. This is a deliberate, massive wealth transfer from individual homeowners to corporate landlords. And when the next market downturn comes, guess who will have the cash on hand to buy up even more properties at the bottom? Meet Jennifer, a nurse in Atlanta making $75,000 a year. She's been saving for a house for 5 years, has $50,000 for a down payment, and gets pre-approved for a $400,000 mortgage. She finds a perfect house listed at $350,000. She offers $360,000. The next day, an LLC swoops in and offers $425,000 in cash. No inspection, with a 7-day close. Jennifer loses. This exact scenario happens to her 17 more times. She eventually gives up and rents an apartment for $2,400 a month. The same apartment that was $1,600 just 2 years ago. And that house Jennifer wanted? It's now a rental owned by Progress Residential, a subsidiary of a massive investment firm. They rent it out for $3,200 a month. So Jennifer's monthly housing cost went from a potential mortgage payment of $2,100 to $2,400 in rent, all while building zero equity. Now, multiply Jennifer by millions. In Atlanta alone, corporate investors bought 32% of all homes sold in 2023. Entire subdivisions are now 100% rental properties, owned by a single corporation. Here's where it gets truly strange. Jennifer is actually paying the mortgage for Progress Residential. Her rent covers their loan payment plus profit. She's building wealth for Wall Street instead of for herself. This creates a permanent wealth transfer system. Homeownership has always been how the middle class builds generational wealth. You own a home for 30 years, pay off the mortgage, and pass it on to your kids. That cycle is breaking. When corporations own all the houses, families can never build equity. They just pay rent forever, creating permanent cash flow for institutional investors. The wealth gap accelerates exponentially because one class owns the assets while the other pays rent on them. But it gets even worse. Corporate ownership artificially reduces the housing supply. When firms buy homes to rent instead of sell, they remove that inventory from the purchase market forever. Reduced supply plus the increased demand from investors equals skyrocketing prices. The ultimate result is a two-class system: property owners and permanent renters. No middle-class home ownership, no building wealth through real estate. Just landlords and tenants. And this problem is bigger than it seems. When an entire generation can't afford homes, consumer spending collapses. People spending half their income on rent can't buy cars, furniture, or other goods. The entire economy contracts. So what can you do? First, consider alternative markets. Corporate investors are laser focused on major metropolitan areas. Smaller cities and rural areas still offer opportunities for individual buyers. Second, explore alternative ownership models. Things like co-housing, tiny homes, or even mobile homes can provide paths to ownership outside of the traditional market. And third, if you have to rent, try to negotiate longer-term leases with smaller, individual landlords rather than corporate-owned properties. They often offer more stability and reasonable rent increases. The housing market isn't broken. It's working exactly as it was designed to. The real question is, in this new economy, are you going to be the owner or the renter? Thanks for watching. If this video opened your eyes, make sure to like and subscribe for more content that breaks down the systems that control our lives.